what's up? Welcome back to the CEO Pulse podcast, where you get the real, the raw, and the mind of entrepreneurship. We are sitting down with none other than Mr. Prefontaine. He's the founder of Smart Real Estate Coach, a real estate business that focuses on coaching. And the cool thing about this model too is that it's family owned. So your family plays a big role. You have people moving into CEO positions, but you've been able to build this framework of empowerment, for other people. While going through your own experience as a real estate investor. You guys do from 15 to 30 deals on a monthly basis between your guys' deals and JV ventures that you're partnering up with. So I'm very excited to tap into all that. Now I did click record a couple of minutes ago. We just went on for like 2-3 minutes, and I wasn't recording this. So
all good.
Now we're back on track. So, Chris, thank you so much for taking the time and spending some time with us here. Welcome to the show.
Yeah, thanks for having me, Rafael. I appreciate it. Ready to dive in.
Yeah. So give us a little bit of context. How did you get started in real estate, and eventually made it to the point where you're actually empowering others? You're based out of Rhode Island, and you're building this organization, right? As you go through the process, you just right before we clicked record, you mentioned that your son-in-law is moving into the CEO role. So I'm curious to know how the back end works when you have this family culture and family dynamic in it. Yeah. And also, tapping, of course, into your own personal story.
Yeah, sure. So I'll share. I've been at this 31 years, so I'll do it very brief.
Yeah.
I started in 1991, and I started building homes, and then I bought a Realty Executives franchise. I sold that to Coldwell Banker in 2000. Started working on my own investments and coaching people all over Canada and US. That led up to the crash of 2008.
Yeah.
Coming out of the crash, I had to re-engineer the business, because no credit, no cash left. And so we re-engineered it to only buy properties with creative financing. We call it buying on terms. Mm-hmm. And that means we don't use banks, we don't sign personally, we don't use our own money. And when I say we, you already alluded to it, it's mostly family, but now we've grown to quite a nice team on the coaching side. So we have the family buys and sells locally on terms, creatively. And then we teach real estate investors the exact same thing we do every single day. And we do that all over North America. And that is with those same techniques. So people are getting out there, usually from a W-2, transferring into real estate, and they're getting out there and doing deals without outlaying cash. And that's a big deal right now. And doing so in an interactive manner with us. You mentioned JV. Mm-hmm. So it's that interactive revenue share. So they're doing it with someone on their shoulder, because things happen. I know they go to seminars and they don't get this, but things happen. And so we're there with them to do the deals. And then I think you asked about the CEO situation.
Right.
If you asked me in 2016, even not too long ago, I'd say it's me. I got a couple of people working for me. That's what I got. But we had hired some coaching and some companies that teach you to scale. I'm still with them, and they taught us how to scale the thing. And so we made Inc. 5000, fastest growing companies in the US the last 2 years. And wow. As the company started growing, it was real clear that I couldn't be in every role. And my son-in-law really has deservedly moved into the CEO role as of the first of the year coming up.
Well, that's amazing, man. Inc. 5000, and so intentionally you began growing the company in 2016. Mm-hmm. You had a major track record before that point, but it's really mind-boggling, right? How quickly things can change when you become intentional about pushing something. Now, is creative financing the majority of your deals? Do you guys do any other strategies, or do you just focus primarily on creative, or
just 100% creative? And in the creative space, Rafael, we only do 3 types of purchasing. We purchase owner financing, mm-hmm. purchase subject to existing financing, and purchase lease purchase, sandwich leases everywhere but Texas. So those are the only 3 ways we do it. And then within the owner financing, there's actually niched down even more. We deal with owners who are free and clear. There's no mortgage on it. And we do that for a lot of reasons. They're easy to deal with, but mainly we structure principal only monthly payments, which is huge. So that's sort of the niche within the niche.
Yeah, to keep the payments controlled. And what do you guys do after a period of time? Do balloon payments, or? or the
Sometimes we have
experience?
balloons, or we're going to kind of create the deal after the deal and either offer some incentive or convert the deal some way to, 15, 20 years. So
Yeah.
we call that kind of advanced technique wealth stacking. So you take a student's portfolio of say 8 or 10 when they get up that high, and you start hand picking 2 or 3 of those to go back to the seller and restructure the deals is a win-win. And then now you have long-term and short-term in your portfolio.
Yeah. I love it, man. I love it. So you're building this portfolio, and then you almost have a timeline to the strategy that you're using, right? You come in and then pivot, depending on how far into that timeline you are. That's clever. I don't see a lot of people doing that kind of stuff.
Well, there are some creative people in the space, but when I came out of the crash, I said, all right, I need someone, like, I know real estate. I've been at it 18 years at that point. But I
Yeah.
wanted someone in this newer, it's not new, right? But it was new to me.
Yeah.
Niche, and I got someone to help me do that for 6 months before I could soar. And it's just the same way, not to go backwards, but it's the same way with the scaling.
Yeah.
So I don't care what you want to do. Someone's done it. You just go find them.
Yeah. Yeah, and that's the thing. I had this stigma against coaching, right? But at the end of the day, a good friend just put it into perspective and told me, "Listen, man, do you want to cut to the front of the line? Like, that's really what you're doing. I mean, you can't figure out it. Like, you can figure out this whole thing. You can learn from YouTube. You can, kind of, put all the pieces together. It's just going to take longer." And probably be a lot more expensive because of mistakes and dumb tax. But yeah, it becomes one of those things that as you go through the process, you learn a lot, right? But you're also building. I think that combination of action, right, and progress is really what makes the coaching part worthwhile. So now you have, you're coming about the creative financing, building your portfolio in a couple of different ways, right? You're partnering up with people throughout the country. Are you seeing any and this leads me to one of the questions that I wanted to ask you initially, right? What are you seeing across the nation in terms of like the market activity, where creative financing is going?
Yeah. I think, okay, so right now is a few things coming together, sort of a perfect triangle. And that is, you've got interest rates are rising. And as I said to you off air, that people think they're high if you haven't been around a long time, but they're not high. The 50-year average is 7.7. We know that we're not even quite there yet. And then we know that this is only the third time in 50 years that there's been an affordability problem in the country. Only the third time in 50 years. So if there's an affordability problem already, and we're not even at 7.7, what's going to happen when we get up there? You have hundreds of thousands of maybe millions of buyers that 7 months ago thought they could buy a house. Now they can't. Things change. They can through creative financing though. But when that demand came down and continues to go down, what happens to the sellers? They're now calling my students like they never were 6 months ago. So the creative financing demand is higher than ever. You mentioned JVing deals. So we do our own deals in-house. We revenue share with students so they can learn on the go. And now recently there's been a different twist to the business for the better. We have 2 large companies. A third came forward, I heard, that your listeners would probably know the names, so the names aren't important, but they came to us and said, look, our community is all fix and flip. Our community is all wholesale. We got both of these. And our community needs another outlet. Like when that doesn't fit in their box, can you guys then show them how to do creative? So we have this really cool strategic alliance that are going to bring in all kinds of deals because of that, because they recognize that creative financing is going through the roof right now. Absolutely. It's a great time for it.
I've been doing creative financing deals since 2012. I think that's when I did my first one.
Awesome.
And always, I've always had a 4 different ways of structuring deals, and now we're seeing the creative financing just kind of became the one of the popular things, one of the quote unquote new things. If you go back to go back to Robert Allen days. It's been around for a long time when it comes to the strategy itself. So it's tried and tested. But I feel like you got to have a couple of different ways of structuring deals, and creative financing is actually one of the most solid ones that have stood the test of time, right?
Yeah.
And markets, per se. So
for sure.
Yeah. How do you go about when it comes to like lead generation? Do you specifically look for leads that are going to match your creative financing avatar or process, or do you do like a blanket outreach for everybody and then just kind of tailor as you go through the process?
Yeah, the answer is both. Let me explain. At the forefront, when someone's new, kind of base level foundation, they're gonna have their virtual assistants call expireds for rent by owner and for sale by owner. Basic stuff.
Right.
Everybody's familiar
Yeah.
with. Then beyond that, the niche list, if you need more leads or you get more aggressive, would be my favorite one. There's a bunch, as you know, but my favorite one is free and clear out of state. So they have no mortgage and they live out of state. They don't live there. That's
Yeah.
a great, because then you get those creative financing on the principal only deals. Then if you want to target capturing properties right now when rates are hitting 6 and 7, you want to buy properties with a rate of 2, 3, and 4. You want those sub 2 deals subject to existing financing. And if you want those, what do you don't want free and clear. So you want, maybe people that bought, one we tried out and had successes, people that bought between 15 and 19, because that was pre-COVID,
Yeah.
with little equity. So
Yeah.
now if they're messed up a little bit. So two little options of the spectrum. The free and clear people are fine financially, and the other people need relief, and we're dealing with two different avatars there.
Yeah. I like that. One thing, right, that I think a lot of people are missing out there is the fact that, I mean, you can look at a creative financing deal right now with 2%, 2.5%, 3% interest rates. And when you compare that to, whatever we're at, I think, what are we at, 6, right now?
I don't even know. It's up there. It's
Somewhere in
yeah.
there. But you bring that to the table, even if you're going to do a wholesale assignment on the thing or keep it for your own full portfolio, like that's a big value add. And I think before the creative financing conversation started happening, or it kind of became, more mainstream, I feel like a lot more people know or are aware of it now than they were, 5 years ago, right? But there was only, there was only one way to skin the cat, and there were so many deals just being left on the table. I mean, I know we're doing deals like that left and right. And it tapered out a little bit during during COVID and that crazy little time frame, but it's picking back up. I mean, it's just one of those strategies that works. Besides that, do you guys I mean, you work through 3 different ways. So basically you have a loan in place, you assume the responsibility of the loan, or you get a seller financing, absolutely, complete seller financing agreement from the seller because they own it free and clear. And then you mentioned a third strategy. What was it? The lease sandwich, right?
Lease purchase, and we do that with a sandwich lease, meaning you're controlling the home with the lease, but you're also lease purchase, but you're also going to exit that on a rent own, so you're in the middle. You just can't do that in Texas.
Yeah. Okay. So 3 different strategies. Is that also, I mean, I haven't done lease or sandwiches. That's one strategy that I haven't tapped into. I've done lease options, but not a lease sandwich. So I don't know a lot about it. Can you break that down a little bit?
Yeah, so if you're used to lease options, then you're used to the front end of this, which is I'm going to tie your home up with the lease purchase agreement. It's going to say that I'm going to take over your payments. We make ours contingent upon a buyer, so we don't have to come out of pocket. So once I get my tenant buyer, we take over the payments, and then we take over all maintenance repairs. We find a tenant buyer, so that formed the sandwich. My buyer is one side of the sandwich, my seller is the other. I'm in the middle. I do lien the property with a notice of option, a cloud the title, because I can't have that risk of them selling it off to Uncle Joe or someone else, right?
Right. Well, you wait.
So that's all the differences. And then with that security, I have an equitable interest in the property. Now I can go fill that property with a tenant buyer.
Okay. Is it as profitable as creative financing deals, or is it less?
I lump it in the creative financing, but that's a good question, because all our deals, Rafael, have our trademarked 3 paydays in them, all of them, with a few exceptions if we do like a wholesale or something. But most of them have the 3 payday system. The 3 paydays across North America average for us between a low of 45,000 and a high of $250,000. That's per deal. For our family, it's on the lower end. It's like 75. We're kind of in the lower price range, but still, just say 75. Forget the bigger ones. That's per deal. So those are significant deals, and they can be had with the sandwich leases still. What you lose in a sandwich lease is you lose the ability to depreciate it and do things like that are more profitable. But your script with a seller is a lot easier saying that than I'm going to take over the deed. And you can always pivot out of that a year or two down the road when they trust you to the sub 2. Does that make sense?
Right. Yeah, it can be an entry level type of strategy.
Yeah.
I mean, you said 3, and you have this actually on your website, and I know you talk about it, but you have the 3 payday strategy in the same deal. What does that mean?
Yep. So let's go with the when I said I'll tie your house up with the lease purchase, because it doesn't matter if I buy it, owner financing, or how I buy it. The three paydays are the same. Payday one is we deal with buyers that need time. We're not dealing with tenants that maybe have a dream to buy. We're dealing with buyers that either because of COVID started their own business and now need 2 years of seasoning to get financing,
Yeah.
or they need credit repair. So they have a down payment. They're ready to buy. They just want our finance. Well, they give us that. That's non-refundable. That's
This is
payday
an
one.
end user buyer.
Yes. Yep. Consumer. Yep.
Okay.
They give us payday one. Payday two is I'm paying something to the seller or the underlying debt on a monthly basis. I'm collecting something bigger on a monthly basis from my tenant buyer. That's payday two for the whole term. We average around 300 to 1,000 there per month per house. And then payday three is the biggest. Payday three is the markup in the house price plus all of the principal pay down throughout the whole term. And that could be in any one of those types of ways we buy. So that's what when I say they average that much, that's how those come about.
So you on the sale of the house, you actually end up selling the property at the end of that strategy, and then you make a big payday on that.
Yeah, we actually sell it at the beginning via rent to own, but at the end they
Right.
cash it out. Yes, they cash it out, so we get the payday three.
Gotcha. Yeah. So by that point, I mean, you already have a couple of things, right? Equity in the deal, so that number grew, I'm assuming.
Good question. No, we lock the buyer's price at the beginning. Likewise, though, if the market goes down, just like a buyer,
you
it's
secure
their
it.
deal, like up or down, and you're taking care of the house. You're a buyer. You just don't have a loan yet.
Yeah, you secure. Okay, so you secure the price point with them. Yeah, I guess you're both protected if the numbers make sense at the entry. Awesome. So now you made it into the 5,000 Inc. 5,000. Tell me a little bit about that. I'm wondering how that whole thing kind of transpires from the entrepreneur standpoint. I mean, your strategy is killer, is tried and tested. Obviously you've been doing it for a long time. So that's one aspect, right? It's kind of like the commodity or the fulfillment of the business. But what about the nuts and bolts of actually running the business, especially with family members and I mean that's one question that pops up all the time.
Yeah,
Should I hire people that I know? Should I bring people into my company that are relatives and that stuff? How do you mitigate that, or how do you?
Here's how you make it so it's not an issue of doesn't matter who it is, and that is we started this in 2017 with a company called Elite Entrepreneurs. We've been part of them. That's what I alluded to earlier. They help you set up the mission where you're going for 5 years. Now we're on our second mission, which will be 3 years. But then more importantly, they set up your values. So your values, mission, and purpose. When they set up your values and you all vote on them, then it doesn't matter if it's family or someone else in the room. When a decision comes up, it has to align with your values and your mission. It's not opinion. It's not a personality. It's does it align with what we all voted on at the beginning of this process? Then it takes all that personality out of it from a conflict standpoint. That's how we smoothly operate and not worry about it. And then in the room, when I say in the room of elite entrepreneurs, you have all different companies, not just real estate, all dealing with the same thing between 1 million and 3 million, between 3 million and 5 million. You have the same problems, even though you're not the same company, same street. So that's how we learn to go through that process and scale with them.
Yeah. It's important to get exposed, right, to different perspectives. I one of the first masterminds that I was a part of was Vistage. Vistage is I mean you create, I don't know if you're familiar with it, but they create shares and you have a chapter of 10 12 people, 10 12 different businesses. So CEOs, we all, I mean, at that point I had a medical transportation business, but we would sit in a room and then just break everything down as far as problems, opportunities, and you were talking to people from the franchising industry, from massages, from restaurants, and all kinds of stuff. Now when you take a step back and you look at the overall framework of a business, right, there's a lot of similarities, just the industry is different,
right? Exactly.
And what comes along with that is its perspective and solution, problem solving. And I think one of the biggest things for me was perspective. At that point I had this tunnel vision on what my company could do, and then I started having conversations with people who were killing it and crushing it and doing a lot better than I was, and I was like, wow, okay, cool, I can take a pivot here and take a pivot there. So what's in the works in going forward for you? it's I mean, right now, of course, you're coaching, you're still, actively in the trenches and doing business, which is it's a thing, that's what I see, and you probably see this in the coaching space as well. People start coaching and then they start doing the business. They lose touch of the business, and they're still, coaching things that were working 10 years ago. But we're living dog years in real estate. You have to be tapped into it.
Yep.
So you're running through that. You're still actually in the business. I mean, you're obviously, operating, right, and coaching at the same time. You have that going. What's in the future? What's in the next 5 years for you?
Yeah, we're actually in the midst of this change with the CEO. We're in the midst of starting a new mission because our 5-year mission took us to the end of this year. Hard to believe. So the mission is always revolving around student transactions. So it's never about, hey, how many of this product can we sell?
Yeah.
Anything we have a product is so they can get resources and have the right tools. And those products are always updated and adjusted to the market, so they don't get outdated. But more importantly, so the field, the students can go do deals, always revolving around deals. We're not going to change that. The only difference is we've grown the leadership team now where they can actually handle it, so we can handle the scaling. And we actually have 6 or 7 certified coaches now, where it used to just be me, and then me and my son, and so forth.
Right. Okay. That's incredible, man. It's you're building a community, you're tapping into their reach, and they're tapping into your experience. So it becomes a win-win.
Yeah. 100%.
I love it. I love what you're doing in that space. You're obviously keeping it dialed in. Control growth is one of the things that you can break a company, and it seems that you guys are doing it well. So big kudos on that.
Thank you.
Chris, if somebody wants to find out more about you guys, maybe reach out to you and how they can work together with you, where's the best place to find you at?
There's a couple of things. I think you can put the show notes in the links, but we've got for your tribe a couple of our best-selling books for free, and it's not one of those free offers where you got to put a credit card for shipping. We ship it. You won't be asked for a credit card. Just go to wickedsmartbooks.com, wickedsmartbooks with an S.com /pulse. So I know they came from your tribe, and we'll do it for free. And then if they want to listen to just kind of more of what you and I talked about, but hear it like A through Z, just go through the free class. I'm big on free. It's not, I want people in the niche that want to be in the niche with passion, not I tried this, it didn't work, therefore I want out. So do your due diligence for free. You can go to smartrealestatecoach.com /masters class. And that's an hour with me. You'll get literally A through Z of what we do. You're not going to learn how to make $1 million bucks on that, but you are going to be open to what we got going on. And I think you'll enjoy it.
Thank you. And I appreciate you guys hooking us up with the free resources. I'll be sure to put the links on the show notes, so they're going to be on there. I have before we wrap up, I have this question that I love asking my guests, and that's if you were walking down the street and you ran into your 17-year-old self, what would you tell that young Chris?
I think the biggest issue in hindsight with anyone is confidence. So I would just say, you literally can do anything you want. Just find someone who already did that path and go latch on to them and put the blinders on for 3 years, at least for that first endeavor.
Focus.
And because you don't get caught with shiny object syndrome.
Confidence. Did you battle with confidence when you were growing up?
No, I just know that at any age, I could go back 3 years ago now and say, what would be better if I did it over? Think bigger. Think bigger and know that somebody already did it. And we control it right here, and we stop it right here. Absolutely.
I love it. Chris, well, thank you so much. I appreciate the time, the golden nuggets, and the perspective on your entire operation. Right, fam. If you're listening to the podcast, go to the link, check it out. All right, you have a couple of free assets in there that can really paint a clearer picture of what the entire process looks like, and it's definitely one of the best strategies out there. I mean, we use it on a regular basis in my company when we're locking up deals. So I can vouch for that.
Love it,
Chris. Thank you so much, family. There you guys have it. Till next one, stay focused. You got this.